Well, howdy there, cowboys and cowgirls. We're only a few days away from the Tesla earnings, all right? The Tesla earnings are coming in a few days, and I want to go ahead and discuss what my expectations are around earnings per share and revenue for Tesla in this upcoming quarter. I want to go ahead and talk about what analysts are expecting if those numbers are way off. And so this is just going to be a Tesla dedicated video all around this upcoming earnings report. Now, let me know if you have expectations for Tesla earnings. I want to hear them in the comment section as always. By the way, make sure you enter the giveaway. That's going to be the pinned comment for the Becoming Master of the Stock Market course. Okay, let's start getting into this, guys. So if you do not already know, July 24th, after hours, Tesla will be reporting their Q2 2019 results. Okay, now these are highly anticipated because this was a quarter that obviously a lot of the bears and a lot of analysts were basically saying that this was going to be a horrible quarter, that Tesla is going to miss numbers really bad, that there's no demand. And so this is a very highly anticipated quarter because we're going to finally see all the results in full. We've gotten some production numbers and delivery numbers that blew the roof off, but now we're going to get to see what's EPS like, what's revenue like. Okay, so we're going to talk about that here fully. Now, just for those of you guys who are wondering, I just want to show you as far as my two main accounts. I own Tesla, how we're doing with that position. In one of our accounts, we own 150 shares. We're up about 13.76%. On those particular Tesla shares, up about just under $4,700 there. And on this particular account, we have 93 shares, and we're up about 21% on that one, so we're up over $4,000 there. So needless to say, as far as Tesla's stock price, it has recovered a lot, and now we're in the green in a very positive way. And even if Tesla stock got hit on these earnings, we would probably still be green on those shares. So things have started to go in the right direction. Never mind if they come out with some really good numbers, which we might just talk about here. Wait to see what happens with that stock. Okay, so let's go ahead and look at what analysts are expecting. So analysts are expecting a negative 42-cent earnings per share number, which is obviously a very, very, very low expectation. Now, what I think is interesting about this is just here today, an analyst that is super bearish on Tesla stock and has a $150 price target. Their numbers that they expect are actually better than what the analysts on average, okay? So this Barclays analyst, an analyst that is super negative on Tesla stock, they have an underweight rating on Tesla shares. They have a $150 price target. Like, they're super negative on Tesla in general. But basically the firm raised its forecast for Tesla's second quarter report to only a loss of 16 cents a share versus before they were expecting a loss of 71 cents. Now keep in mind, once again, right, analysts on average are expecting a 42-cent loss. So that is pretty interesting in itself there, that an analyst that is super bearish is actually expecting better numbers than what the average analyst out there is expecting, okay? That analyst is kind of ridiculous on how bearish they are on that stock. Maybe they're just doing that in hopes that Tesla will miss that number, and then they can say, see, Tesla couldn't even hit our numbers, okay? These bearish analysts, they think about a lot of different angles, okay? Now, the other thing I want to look at here is a year ago, Tesla in the same exact quarter lost $3.06, okay? So regardless of what Tesla loses, whether we're talking, Tesla loses 50 cents, they lose, 10 cents, they break even, they make a profit, regardless, it's pretty much going to be a massive improvement year over year in earnings per share. Because when you're talking about losing $3.06 a share, that's a massive, massive number there. But, now things are getting a lot better for Tesla, needless to say, on the bottom line, okay? Now, what do I personally think when it comes to these numbers, okay? Here's how I'm kind of thinking about it when it comes to these earnings per share number. If we think about this, okay, analysts, once again, were thinking about like negative 42 cents on average, okay? So pretty negative quarter. And Tesla takes a pretty, decent size loss there. I have a hard time getting to a place where Tesla loses any kind of money, especially 42 cents a share. And here's why. This quarter is likely a record quarter for production and deliveries, all right? And you got to think Tesla's probably doing it the most effective way they've ever done it, okay? When it comes to their production lines and everything across the board. And if we look at their other two best quarters a company's ever had in the company's history, you have to go back to the fall time and the winter time. In those particular quarters, they had $2.90 of positive EPS and $1.93 of positive EPS. Now we got to assume that this quarter is probably going to be just as good as those quarters, if not better, from a production delivery standpoint, right? And we could talk about different ASPs for cars. Was one quarter, very heavy as far as like performance models? Was one quarter heavier for like base models? And we got to talk about leases and all those sorts of things. Okay, so it's a very complicated, and it's not just an easy way you can pinpoint and say this will for sure be just as good or bad. But one thing I can say is it's very hard for me to imagine Tesla takes a loss, and especially a 42-cent a share loss, in this quarter they're about to report, when it's probably going to be the best quarter ever from a production delivery standpoint, and they're probably doing it more efficiently than they've ever done it before. It's really hard for me to get to a place where I say, yeah, Tesla lost money, and a decent chunk of money. So in my personal opinion, when it comes to earnings per share for this past quarter, I expect Tesla to have basically broken even, kind of like maybe take a very, very, very small loss, like 5 cents a share, or maybe like a 5-cent positive number, or maybe actually, make a profit, a EPS positive as far as like $1, $1.50 or something like that. So if I'm looking at that, that's what I'm expecting. I'm expecting a break-even quarter to actually a positive, $1, $1.50 earnings per share. Now, if they come out with a better number than that, it's going to blow everybody's cowboy hats off, okay? If they come out with like a $3 positive EPS number when analysts are expecting negative 42 cents, people's cowboy hats are going to fall off, guys. It's going to be ridiculous, okay? Now let's go ahead and talk about revenue. So average estimate from analysts as far as revenue goes is $6.42 billion. Now, if they come in at that number, that will be over 60% sales growth year over year. So just first off, that's amazing, okay? If they just come in at what analysts are expecting, 60% year over year revenue growth, that is an unbelievable number. Like almost every auto manufacturer in the entire world right now is seeing their numbers actually either at break-even levels or negative. And here you have Tesla not only growing at double digits, but growing at 50, 60, maybe 70%. That is ridiculous, okay? That is absolutely insane, okay? Now, what do I think in regards to revenue? So once again, I want to go back to their best quarter they've ever had in the company's history when it comes to deliveries, and that would be the December quarter. They did $7.22 billion in revenue in that particular quarter, and in that particular quarter, a lot of those models were very base model Model 3s, okay? Now, also in this current quarter they're about to report, there are a lot of leases in there, so it gets a little confusing around what revenue numbers will actually be. But I have a very hard time seeing them basically do a 6.4, like we talked about, 6.42 billion is expected there. 7.2 was their best quarter they've ever had. I have a hard time seeing any number under $7 billion. I have a hard time seeing it. It is certainly possible that they could report something in the sixes, but I have a hard time seeing them report anything under 7 in this past quarter. That's just really hard for me to see, okay? Never mind 6.42. I don't know. I mean, still it's a phenomenal number year over year, even if they come in at 6.42, but I'm honestly expecting a little better than that because of what they've done in their past previous best quarters, okay? Now, there are some numbers that absolutely make me laugh, all right? If you look at what analysts are expecting next quarter, analysts are expecting revenue to actually be down 4+% in the next quarter. That once again is, I have a lot of trouble seeing Tesla go negative revenue in the next quarter. It is certainly possible, but I have a hard time seeing the company go negative revenue in the next quarter, negative 4%. That's really tough to see. And I have a lot of doubts on if the company would actually go negative revenue next quarter. We'll have to see if it happens. And I'm happy analysts are expecting a negative number because that makes it easier for Tesla to beat, but I have a hard trouble seeing that. The number that really makes me laugh is next year. Next year, analysts are expecting the company to only grow revenue by 21.6%, which once again, 21.6% revenue growth is amazing for any other auto manufacturer out there, because once again, all other auto manufacturers are basically like flatlining revenues or actually seeing their revenues decline. You have Tesla, like even if they come in at 21%, that's amazing, but I have a hard time seeing them not destroy next year's numbers. And here's why. You have Tesla Shanghai starting to ramp in the back half of this year, which essentially means at some point in 2020, that factory should be at full scale production in China, okay? That's just a huge growth lever for Tesla. Then you have Model Y going into production at some point in 2020, probably in the early to maybe mid 2020. So you have all that demand. You still got massive amount of people ordering Model 3s that have never bought a Model 3 or never bought a Tesla product in the past, or going ahead and leasing Teslas. You still have Model S and Model X holding up their ends. So it's very hard for me to see, and outside of a recession happening next year, it's very hard for me to see Tesla only growing 21% next year. I think Tesla could very much grow 30, if not 40% next year, assuming like the global economy is just okay. And not that we're in a recession and not that like things are going great. Because of Model Y and because of that Shanghai factory, those are two two massive factors, okay? So overall, I'm expecting a very positive earnings report. And I think when you're dealing with Elon Musk and you're dealing with Tesla, you know, maybe some of these numbers could absolutely blow. Anyways, once again, I want to hear your guys' opinion on that Tesla earnings report in the comment section. Don't forget to get in the giveaway, all right? I want to hear your guys' opinion down there. Make sure you smash the thumbs up button if you're a Tesla fan. Thank you for watching and have a great day.